this business about Goldbach levels.
In this teaching, I'm going to show you how you can use a hack of the algorithm relating to time in order to give you a bias. I'll also show you another way you can produce your daily bias and your weekly bias and your long-term bias using Goldbach. Now, information like this, I normally only share with my Discord mentoring community. But given that I just hit 3,000 subscribers on YouTube, I thought as a thank you, I would give you a little insight into the kind of time-based teachings I teach my private community. Now, if you want to join my private community, there's a link to the waitlist below. Given that I just hit 3,000 subscribers on YouTube, I will up the max number allowed in that group, and I'll probably accept maybe another 10 people within that group. Once I've manually accepted those 10 people, it will then go back to someone has to leave before another person joins. This just allows the group to be more manageable, and it allows everyone to get a personal mentoring experience from me. Now, here's some juice for you. You've seen me speak a lot about Goldbach. So Goldbach is very much about price. I have a number of Enigma time related glitches that I'm aware of that I support my trading with, especially the golden bullet. So this is something you can add to your arsenal straight away. Backtest it. It's very, very easy to backtest. Today was CPI. So today is Tuesday, the 12th of March. So CPI has a big move, and it's sometimes very difficult to understand why CPI makes the move and then it suddenly retraces. I will start giving you heads up on how you can start noticing where the swing points in price action are located. Now for this, you need the 90-minute time frame. Okay, I think TradingView, the standard version, will probably give you the 90-minute time frame. Otherwise, you may need to update. Now, once you have the 90-minute candles, you can start realizing some really interesting things. So you see this candle here. What did it fill? We filled this tiny fair value gap. Okay. Why did it go for this fair value gap? Okay, we're on the 90-minute time frame. Let's observe some things. This is the swing high created by CPI, and then we retraced. The time of this candle, this 90-minute candle, was at 8:30. Okay, what time was this fair value gap? 8:30. Right? This is 8:30 a.m. and this is 8:30 a.m. Go to your charts and start having a look at some of the swing highs and swing lows. Note the time of them and the time of the candles using the 90-minute time frame, and see if the time matches. Now, if this was 8:30 a.m., it can match with another 8:30 a.m. or it can match with an 8:30 p.m. Okay, the key component is the difference is a 12-hour multiple. Okay, this is one of the telltale signs of the algorithm. If we have a look at EU for today on the 90-minute time frame, we have something similar. This is the fair value gap that it decided to fill, even though it was already partially filled. Now, what time was the low, which was created by CPI? It was created at 9:30 a.m. Okay, this is the 90-minute time frame. So the candles are 90 minutes and the lows at 9:30 a.m. What time was this fair value gap candle, or this imbalance candle? I shouldn't say fair value gap. It's technically an imbalance because only Goldbach will tell you where the true fair value gaps lie, and this is not a fair value gap according to the Goldbach partitions, right? So this imbalance candle was also at 9:30. Okay, this can start to help you with your daily bias. and give you points at which the algorithm likes to reverse. Now, I have a lot of advanced information on time, some real outstanding things that can make your trading a lot more accurate, which I teach in my mentorship group with the Golden Bullet. But I started looking into this, have a look at the charts, and just see on the 90-minute time frame if price is reacting to previous candles that are separated by a multiple of 12 hours. So again, this could have been 9:30 a.m. and reacted to a 9:30 a.m. or a 9:30 p.m. It doesn't matter. The key component is it's at the same time, right? Now, just to give you guys a heads up and some assistance with your trading, I'll just give you the bias for the DXY. So if we move to the 4-hour time frame and we open up my favorite indicator. So this is my new favorite indicator. AMD Power of 3 Goldbach levels by Pro Muck AJ. Right, what I've got it set to right now is the 243. Now it's hard to see this one, but what's actually running is our old friend Algorithm 2. And Algorithm 2 goes rejection block, breaker block, fair value gap, and it terminates at the opposing order block. Right, now it's a little bit difficult to see this, so I will give you a tip on how you can start noticing algorithms 1 and 2 running. So let's draw it out for you first. So algo 2 is rejection block, breaker block, fair value gap, and it should terminate the opposite order block, which means we are expecting price to fall to at least 1.0233. So you can be looking for the DXY to be bearish, which means EU and GU should be bullish. Okay, not financial advice, but that's a nice gift for you guys considering I hit 3,000 subscribers, so thank you for your support. Now, this is very difficult to see. How can you make it easier to see, right? One way is just to look at the candle bodies. And a trick I do is take away the wicks, and then things become a lot clearer. Okay, rejection block, breaker block, fair value gap. That's where we're expecting algo 2 to terminate. Right, we even have these two candles, just pure down close candles. There's your fair value gap in the fair value gap GB level, which we filled. Right, so there's your bias, and that should help you with your trading. If you would like to learn more about Goldbach, there's a link to the official Goldbach book by Hoppy in the description to this video. And if you would like to join the wait list for my private mentorship group where I teach my personal trading strategy, my time and price golden bullet, there's a link in the description below.